Good day and welcome. Thank you so much for tuning into this webinar hosted by myself, Moir, Financial Advisor at Abacon Blue Star. We would like to take the time to introduce ourselves to you and just give you a bit of insight in terms of what we're offering as Abacon, who we are and what we are about. We offer financial advisory services and we work exclusively with medical doctors. This is where you are now. Terms like disability, budget, tax, savings, expenses, life insurance, these are terms that are going to start getting familiar with you soon. You'll hear them being thrown around by different people on campus. Some of your classmates might already have consulted with financial advisors. No need to panic. We understand where you are right now. As a final year medical student, please don't stress. We're here to help. Our services at Abacon are built on 4 core principles and 4 pillars: tax and accounting, risk management, wealth creation, and leaving a legacy. Part of the value proposition at Abacon is we believe in a synergy between tax and financial planning. We offer a tax service to our clients, which is free for the first 3 years of medical internship as well as ComServe. In joining Abacon, you'll have unlimited access to financial planning specialists. Some of these options include the following: legal services, drafting a will, medical aid specialists giving you sound advice on different medical aid options versus hospital plan options. Short-term specialists, in the event you buy a car in the new year and you need sound advice in terms of what insurance to go with, we can assist you in this regard. Estate planning specialists, this is giving you unlimited access to legal advisors that you can entrust with, that are going to plan your estate and make sure everything is sound going forward. Practice management, we can give you sound advice in terms of investment options with investment specialists. Tax and accounting, this is a service that I've alluded to earlier. This is something we offer all of our clients. As well as risk specialists. This is implementing certain policies and procedures that will put you in a safe position in the event something happens to you. Why do I need a financial planner? At Abacon, we have the opinion that someone with a financial plan is better off than someone without one. A financial plan entails the following: identifying needs, structuring a plan, setting goals, and meeting objectives. By doing these 4 things, we will do the following. This will result in better financial outcomes. Monitor, what do I mean by monitor? Part of the service at Abacon is seeing our clients on an annual basis. We're building a relationship with you, therefore we will be seeing you on an annual basis, going to the hospitals to see you, and we will sit and adjust and review the plan on an annual basis and make sure everything is in check. No need to worry about that going forward. We've also aligned ourselves with trusted brands, companies that we believe in and companies that believe in us. You're a final year med student and you're eager to start your careers as medical doctors. Okay? You've received your appointment letter. What next? This is a snippet taken directly from the Department of Health. This is something you can expect to receive in the coming months. All right? Please take note of the following. Everything you see here highlighted in yellow is important, and please take note. These are the required documents that you will need when registering to be a medical doctor at your hospital. You'll need your ID document, your work permit where applicable, educational certificates, marriage certificate if applicable, HSPCA proof of registration, as well as your income tax documents. We've highlighted that for a very specific reason. This is imperative to have in place before you register as a medical doctor. Guys and girls, please understand that time is of the essence. When you hit the ground running next year, and you will be hitting the ground running, please bear in mind that time is something that you're not going to have. It is a luxury. Make sure all of this is done now. Please let us know and we can assist you in getting a tax number. It's part of the value offering we are giving you as Abacon clients. Please take note of that. When joining the hospital, you will have 2 options available to you. You can do one of the following. You can structure your own package or you can go with government package. Now, our advice to you is to structure your own. Please be advised this is to your benefit, and this is why we suggest this. Up until 2007, Judasa had fought for you guys because it was compulsory to go with government pension. They fought against this because it wasn't in your best interest. We believe structuring your own package is the best way to go. Life is unpredictable. At this point in time, you're starting your internship, you're going to do ComServe, you might want to specialize. A vast majority of you might want to go into private practice one day. We don't know this at this point in time. And that's why structuring your own benefits is just to your advantage. Please take note of that. This is important. All right, this is a pay slip from the Department of Health in Gauteng. This is something that all of you can expect to see in the coming months. It's an exciting time for you as medical doctors. You've worked hard for 6 or 7 years. You now have the title. You will now be receiving the salary. Like anyone in South Africa, we have to pay tax. Because you're a doctor and you're a high income earner, tax is something that you can't avoid or escape. But fear not, we will assist you with that in the best way to get the best out of your 42,000 Rand a month. Please take note of the 3 colored blocks that we've highlighted here for you. Gross salary being 57,000, deductions being 15,500 versus your net salary, which is 42,000. The net salary is the money that is paid into your account at the end of the month. All right? Our job as your financial advisors is to create a tailor-made plan that is going to give you the best way forward to optimize the money and make this 42,000 Rand go as far as it possibly can. These are the current tax tables that have been given out by government and by SARS. Okay? For individuals in 2021, the highlighted portion is where you as medical doctors will be falling into in 2021. As an intern, you'll be earning between 584,000 and 744,000. All right? Please take note of this figure over here, 83,000. This refers to the tax threshold. This will become relevant to you guys in your first year as interns. I will explain that shortly in the next slide. This is an important slide and something very relevant to you as young medical doctors. Above, to my left, your right, you will see a basic salary package of 501,000 plus commuted overtime. This gives us an annual package of 688,000, which will then equate to roughly 57,000 Rand a month. Please remember that tax is calculated on an annual basis. As first-year medical students starting in January and February, the good news is there's a refund waiting for you next year. How this works is one gets a financial year and one gets a calendar year. The difference between the two is simple. A financial year starts in the beginning of March and ends at the end of February. Calendar year obviously runs January to December. Now, from the 1st of March to December, you're obviously a student. SARS unfortunately don't have a system where they can differentiate between the fact that you've been a student from March to December and you started working only in January and February. SARS calculates the tax on an annual basis. With that being said, you are going to be overtaxed in January and February, but don't stress. As I mentioned earlier, part of our value proposition is tax. We will assist you in getting your refund and we will explain to you how that all works in due time. To explain the synergy between tax and financial planning, as I mentioned in the beginning of the webinar, one can take a look at this table here and see the benefit of having a retirement annuity in place. Scenario 1, Scenario 2, and Scenario 3. Monthly salary is the same, but in Scenario 1, we have someone who doesn't have an RA in place. They are not contributing to a retirement annuity. That means, effectively, they have a tax rate of 29% and they're paying the full tax payable, which on this scale is 199,000 Rand for the financial year. In Scenario 2 over here, we have someone that's contributing 1,000 Rand a month. The value of contributing just 1,000 Rand a month can be illustrated over here. Effectively, we bring in your tax rate down to 28.32 and you will get a rebate paid back to you at the end of the financial year next year. In Scenario 3, we have a proposal here of 3,000 Rand a month. The value of this can be highlighted here. Tax payable, 185,000 Rand versus 199,000 Rand to someone that is not contributing to a retirement annuity. A rebate of 14,000 Rand will be paid back to you by SARS next year, which we will take care of on your behalf. The big value in contributing to an RA can be seen over here in the 2%. We are bringing your effective tax rate down by a full 2%. 2% might not seem like it's relevant to you sitting right now. 2% on a 600,000 Rand salary is very relevant, and that ties into sound financial planning. Unfortunately, the statistics I'm about to share with you shed light on the problems we have here in South Africa in terms of contributing to retirement and making sure that you can retire comfortably. 47% depend on family and friends to survive. 36% continue working beyond 65. 16% of people have no support, and 6% retire comfortably to age 65. This is a scary statistic, guys. Having a sound financial plan in place and working closely with your financial advisor will give you every chance of being part of the 6%. This is our goal and it should be yours too. A big part of why our grandparents were not able to retire the way they wanted to is because they didn't take something into consideration, and that would be inflation. Inflation must be considered as an ongoing process, as an ongoing factor in any retirement stage, in every person's retirement goal. What is inflation? To illustrate what inflation is and the effect it has on us, let me demonstrate. What can 1,000 rand buy? In 1960, a motor vehicle. In 1980, a motorcycle. 2018, a pair of shoes. 2020, fuel. This is a scary statistic and a scary fact, but it's a reality that we all face on a daily basis. This is a busy slide, but don't stress. Let me talk you through this real quick. The blue line here is the objective, all right? This is where we want you to be one day when you retire, and that ties into the tailor-made plan that we will be doing with you on a regular basis, on an annual basis. It's not a one shoe size fits all. Everyone's financial plan will be different, and that is why we are here to assist you and build your own tailor-made plan, all right? I'd like to talk a little bit about compound interest and the value of compound interest, all right? As one can see here, this is for a young 25-year-old, much like most of you sitting in the audience today. Your retirement age is 65 and you need income to age 80. That means we have 40 years to get there. 40 years is a long time, all right? And the focus here, guys, is to focus on retirement over a long term. It's not a sprint, it's a marathon. It's about being consistent and continuously working with your financial advisor to make sure your plan stays on track so you finish the marathon within that 6% with the rest of the people that retire comfortably. The value of compound interest, all right? Compound interest is not necessarily at your age about throwing in as much money as you can into a retirement annuity. In our view, the idea is to get started, and that is the most important part. Getting started with a retirement annuity and contributing what is within your means and what you are capable of contributing to. Compound interest does the rest of the work for you. This is a quote by Albert Einstein that for us in the financial sector, we really enjoy because it's something that we really believe in. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. What is your biggest asset? As young medical professionals, it's your ability and your capacity to earn an income. You have a wealth of knowledge from 7 years of academic studies. You're now going into the real world where you have to treat patients, you have to administer paperwork within the hospital, and you have to deal with situations that most of us wouldn't know how to deal with. Your biggest asset is yourself and the knowledge you've acquired at university for the past 6 or 7 years. At Abacon, we are of the view that income protection needs to be the foundation to your financial portfolio. This is essentially what's going to keep you working when you physically can't. Income protection has two components to it. There's a sickness benefit and there's an income protector. All right? Sickness benefit, you need to be booked off for only 7 days or longer in which you have a claim that will be paid. Under your income protection, you'll be paid up to age 65, tax-free. When it comes to income protection, Abacon believes in two companies solely. This would be PPS and Sanlam. They're the industry leaders when it comes to income protection. Let's take a closer look at a medical aid versus a hospital plan. But from our perspective, we want to take a look at the financials between the two and how we can make a difference in your financial profile. All right? A comprehensive medical aid is going to cost you plus minus 3,500 Rand a month versus a hospital plan with gap cover, that's going to cost you roughly 2,000 Rand a month. If we take the 3,500 Rand, pay that monthly, over 5 years you would have paid 210,000 Rand versus the hospital plan where you would have paid 120,000 Rand. That equates to a saving of 150,000 Rand between the two. All right? This ties into what we're talking about, financial planning and wealth creation. What do you want to do with 150,000 Rand that you've saved over the 5 years between the two options? We are of the opinion that a hospital plan is all a young medical professional needs at this point in time. In the event you want to upgrade to a full medical aid, you have the ability to do so, but from a financial perspective, this saving of 150,000 Rand is going directly into your pocket. In the event you do not claim and you pay 210,000 Rand over those 5 years, that money goes straight to the medical aid and you won't see it. To end on that note, over a period of 5 years, you've saved 150,000 Rand. What would you do with that money? Let's talk investments. Why, how, and where? The why, that could differ from person to person. One might have the need for an emergency fund, one might have the need to save for a wedding, a deposit on a house, wealth creation, or child education. The needs are endless and everyone has a different need. How do we do that? We look at term of investment. Are you looking at short term, medium term, long term? We look at your risk profile. If you're a cautious investor, we're going to be savvy with your money and we're not going to invest you in an aggressive portfolio. Your expectation, we will help you in managing expectation in terms of what you can expect from your investments. Accessibility. We have a number of platforms available to you where you as our client can invest in different ways, in different means. As well as tax efficiency. Where do we invest? We have access to unit trusts, endowment, tax-free money market, and direct equity investments. These are categories that we'll go into greater detail for you when we sit with you on a one-on-one and we go into the detail in terms of what you need in terms of your investment, what you expect, and the outcomes you want from your investment. When we talk about term on investments, we need to think short-term, medium-term, or long-term. We need to identify the need for short-term, whether it's an emergency fund, whether it's bank investments, whether it's money market. If we look at a medium term, we're looking at 3 to 5 years. Here we're looking at diversified models. Diversification is a key aspect in any investment portfolio because that is mitigating risk. We look at unit trust options as well as wrap funds. Abacon is in a fortunate position to work with investment specialists where we have access to 2 unique wrap funds that have been tailor-made and created for us, Abacon Blue Star. If we look at long term, we're looking at 5+ years. Here we're looking at share portfolios, tax-free investments, and retirement annuity. Obviously, the longer you invested, the better outcome one can expect. This is a quote that we like to share with a lot of our clients. When you invest, you're buying a day that you don't have to work. 2020 has been a unique year with many, many challenges. We obviously know and understand the effect that COVID has had on us, from a financial perspective, from an economic perspective, to a health perspective. But this is not the first pandemic we faced as a human race. This is certainly not the first pandemic that our markets have experienced either. If we have a look here, we can see the effects of all of these pandemics that have been placed upon us, and we can see the effects they've had on the markets. However, the general trend here is up. And the reason we're sharing this with you today is to show you that in spite of HIV and AIDS in 1981, in spite of SARS in 2003, in spite of swine flu, in spite of Ebola, the markets are recovering. Okay, don't be scared to invest. The signs of recovery are already there. In this graph depicted over here, we can clearly see that history is repeating itself. Where things go down, they will then go up. In our view, investments are like a puzzle. We need to find the pieces that are going to work for you and create an investment portfolio that has a finished puzzle. We need to understand market movements. We understand volatility. Volatility is normal. Please don't be afraid of it. Control your emotions and behavior. Having a financial advisor that's working with investment specialists, we can help you with this. Take a longer view. Miracle of compounding and time. We touched on the 8th one of the world. Diversification, as I mentioned, the more your portfolio is diversified, the more we can mitigate risk. That's lowering risk in order to get the best profitable outcome for you. The importance of rand cost averaging. This refers to consistent investing. Understanding risk is critical. We will not sit with a cautious investor and place their funds in a moderate to aggressive portfolio. We understand that we need to identify your risk tolerance and place you in a fund that is best suited to your personality. The benefit of working with professionals. We at Abacon are fortunate to have a team of investment specialists that work closely with us. Your money is invested with sound hands, with sound knowledge and professional advice. To tie in what I mentioned earlier about risk, successful investment is about managing risk, not avoiding it. Another question that we get asked frequently is, should I go private now that I qualify as a young professional, or should I stick to the bank I have? Again, if you're one that enjoys an app and is happy to do your banking on an app, then stick with a bank that's going to be that you are most comfortable with. If you want a private banker, where you know time is a problem, where you want someone to get things done on your behalf, then a private bank option is perhaps for you. A lot of our clients start internship. Now that you're earning a salary, you will be in a position where you can afford just about any car you want. In the event you do purchase a car in the new year, please be advised that we can assist you with short-term insurance. These are our trusted partners, and we have brokers on hand that will be able to assist you with any car insurance you might need. Part of the value proposition at Abacon is seeing our clients wherever they go. Whether you are placed in a rural province or whether you're placed in a metropolitan city, we will see you on an annual basis at least once a year. We drive everywhere, we fly anywhere, and we are there to meet your needs as your advisors. With that being said, I'd like to take the opportunity to say thank you. Thank you so much for tuning into our webinar. We hope you found this information insightful. Please stay tuned for the panel discussion where we, with a panel of experts, will be answering all frequently asked questions posed by you, medical interns and medical doctors. It gives me great pleasure to introduce our esteemed panel today. To my immediate right, Ashona Singh, a risk specialist in the financial industry. To her right, Fred Duplessis, founder and principal of Abacon. To his right, Salmi Harris, elite advisor and co-principal with Abacon. To her right, Dr. Brenda Nemakongwe, a specialist histopathologist. And to our far right, Ansifa Mark, a medical aid specialist with Optivest Group. We've compiled a list of your frequently asked questions. I'm going to put the questions to our panel of experts here, just to give you more clarity on each question. Is there a contractual obligation if I join Abacon? The answer to that is no. There is no contractual obligation. You are more than welcome to join another company in the event you aren't satisfied with us. However, we find this will be unlikely. Salmi, we have a couple questions here that I can address to you directly. Am I limited to choosing one company, or are there options available?
Steve, there's definitely more options available to the clients. Abacon is backed by a trusted insurance company, and the clients have a variety of options available and solutions from different product providers and different companies. Just to add on to this, what makes Abacon unique and different to other insurance companies out there, we solely deal with medical professionals. And with a legacy of 30 years in the financial industry, only working with medical professionals, by now we understand the needs of medical professionals and we know what is the solutions available, and we constantly go out there to find solutions for the needs that the clients might have.
Absolutely. Salmi, we often get the question, if I sign up and I'm placed somewhere rural, will I still be able to see my advisor? Or what if my advisor retires, passes away, or chooses a different career path? Is there some sort of contingency plan in place? Will I still have an advisor assigned to me in the event this happens? Can you comment on that for us, please?
Most definitely, Steve. We have a team of 7 financial planners in Abacon. Therefore, our financial planners travel around, they travel cross-country to meet the clients at their convenience so that we can track and monitor their financial planning to make sure that they stay on track. And also, in terms of the contingency, like I said, there is a team of financial planners, so should somebody resign or retire, whatever the case might be, there will be contingency. So the client has the peace of mind that I'm dealing with a company and I'm not dealing with an individual.
Fantastic. I have a question here that I think, Dr. Brenda, this would probably be best suited to you. Now that everything is readily available online, why do I need a financial advisor?
Thank you very much, Stevie. I think there's a lot of information available online. In the medical field as well, we know that there's information. I mean, you can easily access any information that you need online. However, not everything that is available online is relevant. And we know very well that when it comes to planning your finances, sometimes you need something that is personally designed for your needs. So what you read online is not necessarily what is designed personally for you. I'm not against anything that is online. I think it's good to read and have information. But when it comes to actually packaging it to your personal needs, I think we still need to have that personal touch. So I still prefer to have a one-on-one with my financial advisor.
Absolutely. Thank you for that. As I mentioned in the presentation earlier, tax forms a big part of our business, and we believe in the synergy between tax and financial planning. With that being said, I'd like to tackle the topic of tax, and I'm going to address this with Fred, our principal at Abacon. Fred, part of the value proposition at Abacon is doing tax for our clients. We often get the question, where and how do I get a tax number? Can you please comment on that for us?
Thanks, Steve. Like I said, part of our value proposition is to do tax for our clients. We're not in the business of doing tax. We're in the business of doing tax for our insurance clients. When you become an Abacon client, we can handle your registration for you. The other alternative is that you go to SARS yourself and do the registration directly with them. So yes, we can do tax registration for our clients.
Absolutely. So this is an ad hoc service that's given to Abacon clients, and it's part of the value proposition. We often get the question, what is the cost involved? Is there a cost for the service of Abacon?
For the first 3 years for medical doctors, there's no cost involved. It's up to ComServe, and in the case of dentists, it will be for 1 year, and dentists and allies, until they've done or finished their ComServe. The service is free of charge. Only after that, we'll be charging a subsidized fee once they become permanently appointed as medical officers.
Okay, fantastic. We often get the question where clients will say to us, I've heard about people deducting an array of different things for tax. Cell phone costs, travel costs, just a number of different deductions. Often we get the question, can I do this? Can you please comment and just elaborate a little bit more on the difference between a provisional taxpayer and someone that's salary employed and how their tax works?
You've already mentioned that I'm provisional taxpayer. A person that's working in public service for a hospital for a salary, that's pay as you earn. Those things, the only two things that they can deduct for tax in the first 2 or 3 years or while they work in the public sector will be their retirement contributions and their medical aid. When they when they start their own businesses in future, then it becomes applicable. These deductions becomes applicable. Things like cell phone charges, travel allowance, etc., etc. But as long as they're working in the public sector, only two things, namely retirement and medical aid contributions, will be tax deductible.
Fantastic. Thank you for clarity on that. Another question that gets asked often is, tax is deducted from my salary. Must I still submit a tax return?
I think that's something that creates confusion sometimes. According to SARS, if you earn less than 500,000 Rand a year, you don't have to submit a tax return. But that also, there's another rule to it as well. That means that you must only have one employer, one IRP5, and no deductions. So if you've been contributing to a medical aid or a retirement fund, then you must actually submit your tax return in order to get your claim. So whether in our client base, it's not really applicable. Most of our clients earn more than 500,000 Rand a year, so that means that therefore every year you have to submit a tax return.
Which is obviously a service that Abacon will do for our clients anyway.
That is part of our value proposition.
Fantastic. All right. Last question just around tax. Why do I need someone to do my tax?
Well, come to think of it, there's 13 different taxes in South Africa. I always say to my clients, to the young doctors, if you ever think you could do financial planning without having tax in the back of your head, think again. It becomes a challenge, and it's easy to make a mistake. And I mean, maybe not rocket science stuff, but it's administrative. It's an administrative slip. It's time consuming.
Absolutely.
So therefore, it's just better to have somebody that can assist with that.
I agree fully. All right, thanks so much. That's our portion for tax done. Thanks for the clarity on that, Fred. Made a lot of sense. I hope that does for you as well when you watch this. Retirement annuities, this is a term that a lot of you probably won't be familiar with right now, but it's something that you will get familiar with in the coming years. This forms a big part of a doctor's profile or any young professional's profile. And as Fred mentioned earlier, there's a big advantage to having a retirement annuity in place from a tax perspective. Okay. Salmi, I'm going to address this question to you if you don't mind. As a young professional, do I need a retirement annuity?
Steve, I think as a young professional, it's one of the best things that you can start to contribute to. There's so many benefits that one has to start early in life, because so often we find that people procrastinate these things, they delay it for too long, and then from the age of 40, they get this reality check, oh gosh, I need to start contributing to a retirement annuity because it's becoming a reality. So then they need to play catch up. Whereas you start early, you can benefit from time by the compounded interest.
For sure.
These days, a lot of platforms have bonuses built into it and so forth.
For sure.
And the other thing is one works your entire life to build up to a certain, can I call it a lifestyle? Now, surely at the time of retirement, you want to sit back and enjoy the fruits of what you've done in your lifetime.
Absolutely.
But currently, statistics shows us that only 6% of people can retire comfortably. And I think as a young medical professional, you want to start early in life to not become part of the statistics that cannot retire, but you much rather want to be of the 6% that can retire comfortably.
Absolutely.
The other reason for starting with a retirement annuity is most definitely what Fred said now is the tax, the generous tax deduction that one can get. Because government says because you are taking care of your own pension fund for one day to retire, you will not be dependent on government to retire one day, and therefore you will get the generous tax deduction on that. And starting off as a young professional, the salaries are quite high. It's good salaries, therefore the tax is quite high. So in terms of retirement annuities, we need those deductions.
Absolutely.
So,
We touched on that in the presentation.
Yes.
About optimizing a tax structure, and this is the best way to go about
Definitely.
that. Absolutely.
And one last thing, Steve, what I can maybe add there is the one thing in life that we cannot plan is how we're going to age. So often we get the remark, but I'm going to work until age 70 or age 80. But we don't know. Life can happen at any time, and if you need to retire at 65, what will you do then? Therefore, will we encourage everybody to start early in life so that you can have the peace of mind that I will be able to retire comfortably.
Absolutely, I agree. And I think this is something that young professionals need to take cognizance of early on in their careers. As we touched on in the presentation, compound interest is the eighth wonder of the world. It's not necessarily about how much you start contributing early on, it's just about getting started, and you'll reap the rewards and the benefits of that later on. Thanks for the clarity there, Salmi, really appreciate that. Ashona, there's a couple of questions here that I'm going to direct your way. As a risk specialist within the financial industry, I think you can touch on a couple of the questions that have been put before us here. One of the questions here is, can I take out funeral cover for extended family?
Steve, absolutely. You can actually insure up to 10 members on a funeral cover for extended family. And those can include your mom, your dad, grandparents, mother-in-law, father-in-law, nieces, nephews. So yes, you can.
Fantastic. And the cost involved there is pretty low as well.
Yes, it's pretty low. So yeah, it varies from person to person, also on age.
Absolutely, yeah. Okay. What role does rewards programs play in my financial profile?
Well, you know, of late you'll find that a lot of insurance companies offer different rewards programs. But what's very important to note, when you link these programs with your risk cover, you need to understand that you have to maintain a certain lifestyle on an annual basis to keep your cover intact, to keep your premiums low. So this costs time as well as money to do so. So I think that's something that your audience needs to understand. Yeah?
Absolutely, especially given our audience are doctors specifically, going into internship, ComServe, they're going to hit the ground running, where time is going to be obviously where time is going to be something that's valuable to them, and you know, after being on call for an extended shift, the last thing they want to do is going to go to gym to maintain their rewards program.
Absolutely.
Okay.
I think
agree.
if I chip into that, Ashana, being a doctor myself and a wife and a mother of 3, I mean, rewards programs are good. I was offered that. I was on one program myself. And I mean, initially it sounded very good when I was single and young and, you know, could pop into the gym and could decide whether I needed low-fat milk or fruits. But when it gets to a time where there are 3 kids and there's work and there's no time and you have to rush into a store and decide that for you to earn points, you need to buy a low-fat milk or you need to buy fruits, it just really becomes tedious, and it's something that you just do not have time to do. So I think for a professional person, sometimes it's really not doable, and sometimes unforeseeable things happen. You get injured and you just can't exercise. Then what happens if I broke my leg and I can't run for 6 months? So it really means that I'm unable to actually bring my premiums down because of that. So personally, my personal experience is very difficult to actually link your reward with your covers or your premiums.
Absolutely. Thanks for that, Dr. Brenda. Ashona, we often get the question, what is the difference between a sickness benefit and a temporary income protection?
All right, Steve, the answer is actually quite simple. The sickness benefit, firstly, it's only offered by 2 insurance companies. Most of the insurers offer temporary income protection benefit. One of the big differences between the 2 is that at claim stage, a temporary income benefit actually asks for loss of income, whereas your sickness benefit does not. However, one needs to understand that a sickness benefit is not available just to any type of client. It's exclusively available to your professional clients. It's a small group of professionals who actually qualify for the benefit.
So this is hugely beneficial to the Abacon client base, which is obviously doctors. So this kind of thing is perfect for them.
Absolutely.
Okay. And you would recommend as a specialist, this is something that needs to be part of their financial profile?
No question about it.
Absolutely. We often get the question, I'm young, do I need risk cover? Why can't I just save that money instead? Sorry, just before we go into that, Dr. Brenda, I think as soon as Ashona's given her version of this, you can maybe tie in and just give your opinion on this as well, especially being a doctor that's been in practice and that has this particular product in place.
All right, so Stephen, that's a very interesting question. And, as we all know that risk cover is regarded as a grudge purchase. So, let me do as much as I can do with my money now, and later on we'll see how we can cover ourselves. But I'd like to explain it to you in this way. You have something called wealth creation, and then you've got something called wealth protection. We all in this room as well, we all like to create wealth, and wealth creation could mean saving money, it could mean investing money, it also could be buying off a house, a car. So we accumulate all of these things. But what we don't realize is that when life happens, how are we going to protect what we've created? And the best way to do that is through a risk policy. So when life happens, we need to understand that the bills still need to carry on a monthly basis. Someone still has to pay for the bond, for that GTI.
Absolutely.
Yes, so it's important.
I agree wholeheartedly. I mean, you speak about life happens. 2020 has been a perfect example of that. COVID just came out of nowhere, and it's obviously flipped everything upside down from an economic perspective, from a medical perspective, job security, those sort of things. So life happens, and 2020 has probably been a prime example of that. So Dr. Brenda, if you don't mind just chipping in here, what are your thoughts on having risk cover in place as a medical professional and in your experience?
I think what I always say is that in every profession, you need to sit back and ask yourself, what is your most important asset? And as a doctor, for me, my asset is me being able to go to work. I need to wake up and go to work. And there is no way I'm going to save or create wealth if I'm unable to go to work. So in a way, I need to make sure that me going to work, it's a value. I need to protect that with everything I have. Because if I wake up tomorrow and I'm unable to go to work, then I'm not going to be able to save. Absolutely. And what is the best way to protect your ability to earn an income? You need to have an income protector. That's how I see it. If now I'm sitting here, not being able to go to work, I need to do something to protect those hours. So I think for me, yes, we need to create wealth. We need to save. But we will not be able to do that if we don't protect our wealth. And Ashana put it very well that if you do not have an income, you still need to pay for a retirement annuity, something that we said now. You still need to pay for your sickness benefit. You still need to pay for a funeral cover.
Absolutely,
so I think first and foremost, the most important thing is to make sure that you protect your income so that life can go on even if you are unable to earn an income.
Couldn't agree more. Thank you, Dr. Brenda. We're going to touch on the topic of medical aids now. I'd like to address Ansa in this regard. She's our medical aid specialist and she works with Optivest, which is a strategic partner with Abacon. Ansa, we often get the question, what is the difference between a hospital plan and a comprehensive medical aid, and what is gap cover? If you could just please elaborate a little bit more for us on this topic.
Okay, thanks, Steve. A hospital plan is exactly what it says. It's a hospital plan. You have to be admitted into hospital to get the benefits and having your bills paid. So everything that happens within the hospital, that will be covered on that plan. A more comprehensive plan or a savings plan, That offers the basic hospital plan as the core of that product, but then it also has day-to-day cover. You're going to the doctor, going to the dentist, having your eyes tested, getting your medicines. On both those plans, you have your chronic medication, your PMBs, which is covered in those plans, but anything else other than going into hospital on a comprehensive plan, that will come from your day-to-day benefits. You'll see it in your premiums. The more comprehensive plan is a bit more expensive, but for young professionals or anybody that's healthy and young, a hospital plan which should do the job.
Yeah. We touched on that in the presentation as well, where we compared a medical aid versus a hospital plan. But from our perspective, it was more about the financial, the numbers between a medical aid and a hospital plan. And from a financial perspective, why we believe a hospital plan is maybe a better option. So you would agree then, for a young medical doctor, generally fit and healthy, obviously have access to the hospital itself and to colleagues who are doctors that can diagnose and address certain needs, that is sufficient for them?
Yes,
and,
absolutely.
And it's all they need at this point in time.
As long as they're healthy and they're young, hospital plan is they don't need anything else.
I agree fully.
That.
And often a lot of the young doctors will say, but I'm on a hospital plan, but I'm stuck on a hospital plan. But that's not the case. They can quite easily upgrade to a full medical aid as well, can they?
Clients has once a year, at the end of the year, they have a window period where they can do option changes. Should their circumstances changed, they then have the opportunity to upgrade to a more comprehensive plan, and then later, if they wanted the next year, they can downgrade again. But once a year, they can upgrade to a better plan if they want to.
Fantastic. All right. So the option is there for them, which is great. Can you just clarify for us, what does it mean when a medical aid scheme offers 100% hospital cover versus 200%?
Okay. 100% cover is the medical aids have tariff codes that they have amounts linked to. So when a doctor sees you and they treat you, they use tariff codes, and the medical aid will pay the 100% amount that's linked to that tariff code. Okay? So on a 100% plan, they will then say, for instance, they'll charge 2,000 Rand for that tariff code, the doctor, but the medical aid tariff code, the amount is only 1,000 Rand. The medical aid will then only pay 1,000 Rand, which then leaves the client with a deficit of 1,000 Rand. And that is where gap cover comes in. If it's an in-hospital claim, the gap cover will cover the difference. If you're on a 200% plan, the medical aid will pay the 2,000 Rand because it's 200% of that tariff. But if it's more, because we find that some doctors actually charge up to 700% of medical aid tariffs, the gap cover will cover that difference. Because medical aid is very expensive, you don't want your client to have to pay the premium for a medical aid and still have shortfalls on claims. So it's very important for a client who has a medical aid to also have a gap cover in place.
Absolutely. So based on that, on what we touched on earlier then, a young medical professional to have a hospital plan in place is perfect, but gap cover is absolutely recommended as well.
Yes, always, if you've got a medical aid, if a client has a medical aid, they always have to have a gap cover in place.
It's just giving you more peace of mind, and it's giving you an additional 700% cover. It's a no-brainer, really.
Yes.
Fantastic. Absolutely. And I think for our clients who are young medical professionals, as well as older medical professionals, but in particular the young doctors that are about to start their careers and start their internship, having a hospital plan in place is perfect, but gap cover is an absolute necessity, because that's going to give you an additional 700% cover, which will then equate to peace of mind, which is, at the end of the day, what you want. Fantastic. Dr. Brenda, you wanted to add to that conversation as well, just in terms of medical aid, the 100% versus 200%. In your experience as a doctor, as well as dealing with younger doctors, a lot of them don't feel a hospital plan or medical aid is necessary. What are your thoughts on that?
I think it's a very interesting thing that you're discussing with the medical aid. Let me just give you my personal experience, actually, which I just thought of now. When I finished medical school, into my internship, I did not have a medical aid. And I didn't see the need for a medical aid. I mean, I just became a doctor. I can treat myself. Why do I need to take 70% of that little money that I'm getting, give it to somebody else? That was my view at that time. And I don't know whether to say it was unfortunate or fortunately, I fell pregnant during my internship. And I didn't have a medical aid, and my boyfriend then also did not have a medical aid. And you know that there's a waiting period with a medical aid. So, I mean, joining a medical aid at that point did not help either of us. And what was the plan then was that, look, we're just going to get a gynae and we'll go in and pay cash. And that's what we did. We went in and we paid for a cesarean section, and there was a planned date that we would then go to the gynae on the special day. And it just happened that I went into labor 300 kilometers away from the gynae. And without a medical aid, with money paid into a gynae's account who was 300 kilometers away. And I had my cesarean section in a public hospital. That's what happened. And I think we really do not think about that because we think we doctors, we're capable. There are certain events that we're not capable of taking care of. So it's very important to have a medical aid or a hospital plan like she expanded. I don't think that we should be saying that we're able to treat ourselves. So I think that it's very important for the audience here today to understand that a medical aid or a hospital plan is still very important, even if you're a healthcare provider.
Absolutely, I agree with you wholeheartedly. And just to add to what you're saying there, having that cover in place is giving you peace of mind as well. But from a tax perspective, Fred touched on it earlier. As a salaried employee, which a lot of our medical doctors are going to be, especially internship and going into ComServe, there are only two tax-deductible options they have, one being a retirement annuity and the other being a medical aid or a hospital plan. So from a financial perspective, it's to your advantage 100% to have a hospital plan or a medical aid in place as well. So that makes complete sense. Thanks for that, Dr. Brenner. Thanks for sharing your story. And yeah, war stories are always just a fantastic way for young medical professionals to relate to what you're saying, given the fact that you are a doctor. And because we've worked with doctors for a long time, we've come to learn that doctors listen to doctors. And so hopefully they will heed your advice and take note of what you've mentioned today. Ansa, we have one more question just around medical aids. We often get the question, can I add extended family on my medical aid?
Okay, that's a wide question. Medical aids as a whole do not allow just extended family to go on, okay? If you have extended family that needs to go onto a medical aid, they will ask you to prove that extended family member is financially dependent on you.
Okay.
And they will ask you to prove it by sending statements, bank statements, court orders, to go do an affidavit saying that that member is financially dependent on you. But just asking to put your mother on the medical aid, they're not going to allow that.
Okay. Thanks for clarity on that, Knight. We appreciate that. That concludes the panel discussion today. I'd like to take the opportunity to just say thank you to everyone that's joined us here, Ashona, Fred, Salmi, Dr. Brenda, Ansa. This has been an invaluable discussion. We really think that what's been said here today, the doctors listening to this and watching this, please take note of the things that have been said. These are industry experts and people with experience that know what they're talking about. We really hope that you found the session insightful. Thank you for tuning in and having a listen to us. We really appreciate it. We wish you all the best for all your future endeavors, and stay safe out there.